Hi, this is Joe Rabil from Rabil Stock Research with your Daily 5. On today's show, I'm going to analyze the S&P 500 chart in multiple time frames. I'm going to look at a monthly chart to start, and then I'm going to look at two weekly charts. I'm going to look at a daily and then an hourly. I think there are a few really important things taking place that we need to monitor over the next few weeks or so, and I really want to explain what those are so you can keep a lookout. Let's go ahead and get into the charts. And as always, I start with the monthly chart. So I've got the monthly in the bottom left, weekly in the bottom right, daily in the upper right, and then I've got another weekly here. If you have an hourly up here, I do recommend this look. I think it's really useful tool to have all four time frames up at the same time and to give you a really good feel for what time frames are really in control or what type of trend you've got in each time frame, whether you're overbought or oversold. You'll start to see things way in advance when you have a look this way. So as we bring up the monthly chart, the key thing on this time frame that I think is important is the slope of this 18-month line. If you notice, we've been rising steadily, and now it's starting to flatten out here, okay? And it hasn't officially rolled over, but we're getting to a point, because it's taken so long to get any kind of rally. By the time this actually does rally, it does look like it's going to roll over here. So I find that to be a bit of a concern, because if we go back and look historically speaking at times where this chart rolled over, if you notice on this drop here back in 2015 and 2016, the 18 never really rolled, and we never failed at that line. We came down below it a few times, but when we came back up, we went right back up through it. Look for the times going back historically where we actually failed at a line that was rolling over. That was back in 2008. Another time back at the beginning of 2001 where the line was rolling over. We went up and tested and then failed, right? And I can go back, historically speaking, I can go back a long way. We really didn't have that take place in 94. The decline in 90 dropped and then it went right back up through. It never really failed at that line. There's really only one time that I can find going back, historically speaking, where we came down, rallied up, and this line rolled over. We failed at the line on a monthly chart where we hit the line and then the next month was down, and then it didn't have any downside follow through. I mean, I can go back historically and say, here's the rally where this was rolling over in late 81 and we had a decline. Here's another one back in 77 where we had a drop and this was rolling over and we had a decline. We had another one back in 73. I mean, I can keep going, and I'm just telling you that it's an incredibly important thing to keep an eye on. And so that is likely going to happen here. The question is, are we just going to go driving up through that line, or is this line going to roll over? We're going to rally up to it and fail. We haven't had either one yet, so it's hard to have a really big picture determination yet. But I can tell you that if this rolls over and we rally up and fail, you want to avoid this next down leg. Okay, that's going to be a very, you think this was tough. I think the next one will be very difficult if it plays out that way. Now, it might not rally right now. It might keep dropping, and maybe it comes down into this bigger zone, and then we never really get that full-fledged test of the 18. And then I think, the likelihood is where we turn into a big trading range or something like that. Something to definitely keep an eye on over the next month or so. Now, if we go to the weekly chart, I think there's a couple things that are definitely worth discussing here. Number one, notice how the red DI, which is the strength of the seller. So as we make lower highs and lower lows, you're monitoring this red line to see if it's making higher highs and higher lows, because that's showing you the strength of the selling. And if you notice on this last drop, we did make a higher high in red DI. The thing that's interesting to me is we've also made a lower low here. So we've been making higher bottoms, and now all of a sudden on this low, we make a lower low here, and then we're trying to rally up, but we're not making a higher high, but we're definitely making a lower low when it comes to the sellers. What we haven't made is a higher high in the buyers. So the buyers remain weak. We're making a lower high here, a lower high here. Right now, we're still at a lower high. If we get any kind of a strength through here, maybe taking out this prior peak, something like 3,900, 3,950, and we see red DI turning up through this prior peak, that's when I think we can start to feel like we can get a little bit more of a legitimate rally back to this prior resistance zone, somewhere around 41, 4,200, something like that. The other thing that I would mention here on the weekly is notice how oversold the MACD is. I mean, that doesn't mean that we're going to shift the trend, but it does mean that the likelihood of some kind of an interim rally, I think, is getting larger and larger. And I can go back, historically speaking, we're pretty overdone from a MACD standpoint in terms of its distance from the zero line. Let's look at the daily chart. And one of the things that I just want to point out here is look at what happened at this peak. So do you see how we drop down? And this happens in all time frames. So what I was showing you on the monthly chart, where this 18 rolled over and we failed at that line, that was sort of the start of this decline. And really, we haven't proven we can do it the other way yet. If you notice, this rally got above this 18, but when it pulled back, it failed at the line. It did not hold the line. Whereas that held when it turned down, showed a clear reversal at the line. Now we've got an upturning 18 that we're trying to hold. I mean, we came back pretty hard yesterday, but today it is trying to turn back up. Again, I think if we can get back up through, 3,900, something like that, I think that would be an encouraging sign. Now, if green DI on the weekly is going to come up and make a higher high, this green DI on the daily chart needs to get up through this red. And also, I would expect it to get back up through these red peaks here. I would think green needs to get out above those two. Again, that would tell me that we have a legitimate shot of making a pretty good rally here, 41, 42, maybe even 4,300 if we want to go test the 18-month. Now, in this time frame, the MACD can't get above the zero line. So it's hard to get overly bullish here when you have the two MACD lines below zero. And if you notice, the last time this rallied up to the 40-day, all we had was a zero line reversal with low ADX. So we have to be careful. If this just keeps creeping higher and it doesn't really make any kind of ferocious move or any kind of real strength, then we have to start thinking that this could be another zero line reversal. Especially if you notice the ADX line is actually dropping. It's not going up. So right now it's dropping. If this rallies up and this is staying low and this gets up to the zero line, then we have to think that the potential is maybe we get another zero line failure. So the quality of this rally is going to tell us a boatload about what's really taking place here. If we get some strength here that shows some green DI, then I think we can start to think that maybe this MACD shows a little bit more improvement. And again, we have the potential for a better rally. What's distressing about this whole situation is we know we have a downtrend on the weekly chart, and we know we have confirmation in ADX on the weekly chart. The other thing I want to talk about is this weekly chart. So this is a little bit different. This is RSI, and I've got RSI 20 and I've got RSI 5. So the red line is RSI 20. Now, the 20 line is sort of telling us the strength of the trend. When it's below 50, the trend is bearish. The 5 line kind of helps us with overbought, oversold. And if you notice here, what's taking place is we're making a divergence on the 5 RSI. We got way overdone below the 30 line, and based on these two bottoms here, using the zigzag, we're making a higher low on the 5 RSI. If you notice on those two bottoms, it's not the same. The 5 RSI is not doing that. It's not giving us a signal that there's some kind of a big turn coming. It actually looks like this is more of a rally where the gray line, the RSI 5, gets back above 50 or back into a little bit more of a neutral to overbought condition, and that sets up potentially another sell signal. But again, the quality of the rally is going to determine that. So I would say the high probability is that this gray line wants to work its way back above 5 on a weekly closing basis. So that's something I'm on the lookout for, which should help this work its way back up towards the 18-week. Let's just finish looking off looking at the hourly chart and talking about the same things we've been discussing. Look at how the MACD has just been flying through. So it flew to the downside, broke through the zero line to the downside, flew to the upside, no respect for the zero line whatsoever, comes back down, flying right through the zero line. This is when you know you don't have any kind of a trend. When you have a trend, you have respect for that zero line. It'll come down and hold it and turn back up. Now, this is the first time where we're trying to hold this this zero line, but also notice, let's just go back and look. So we got to move to the upside and look at how this 18 turned up and we held it. That was sort of the start of that move. Now in this decline, we never really got a test after it rolled over. But then when we came down and turned up, we got a little bit of a test here. Clearly, when this rolled over, we had a test here and that started to decline. Now we're getting our first sort of test of this 18 that's now rising. If we can get up through 3,900, I could draw a trend line here, but if we get through 3,900, then you got to start having respect on a short-term basis that these higher time frames are going to be moving back up and working their way back towards this 4,200 area. So a couple of really key things to watch, especially when it comes to this 18-month line up here and whether it's rolling over. If we can actually get a rally on the hourly and get it through 3,900, get ourselves working up towards this resistance zone, we got to see if this 18-month is rolling over. If it is, I think that is a major cause for concern, and we have to be really, really cautious to see how it reacts there. So anyway, that is your daily 5 for today. I hope you enjoyed this segment. You can contact me through LinkedIn or find my research on rabilstockresearch.com. I have a book called Invest Like a Pro, as well as a YouTube channel, and I delve into the subject of MACD and ADX in multiple time frames, as well as trend analysis. So if you have an interest, you can take a look at that. Have a great trading day, and I'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.